Hi, folks. This is Sean Hyman from the Logical Investor, and I want to talk to you about a pattern called the broadening formation or broadening pattern. You can probably see just part of this page on the way my screen is set up, but you can go to investopedia.com. So that's investopedia.com and put in pretty much any term I ever use, whether it's a technical analysis term, fundamental analysis term, chart pattern term, candlestick pattern term, any kind of term you hear that you don't understand, you can go to investopedia.com and you can put in that in the search field of the upper right hand corner of the website. And it'll give you a little short paragraph or two as to what it is, and if it's a pattern, it'll give you a picture. And a broadening pattern is simply where the highs get higher and the lows get lower. It's a very violent tug of war, and it tends to happen occasionally at bottoms, but mostly at tops. And so I show you that pattern because today when I was looking, I've been seeing a lot of volatility and toppy type of patterns in several tech stocks. But here's another one that I ran across, which is it's Oracle stock, ORCL, the weekly 10-year chart. And it had a broadening pattern. Now, broadening patterns aren't super common. Really, triangle patterns are what's more common, which, a symmetrical triangle is, more like this, for instance. There's one, and they tend to break out to the upside or the downside and tend to travel for quite a ways out of that tight consolidation. And so something like that's quite a bit more common, some type of triangle, whether it's ascending, descending, or symmetrical triangle like this one is. Even what they call rectangle patterns, which are just sideways ranges where the tops and the bottoms are fairly even. Those are fairly common. But the broadening patterns are not quite as common, but they're a real violent tug of war where the bulls keep trying to push things higher, and the bears keep pushing things equally or fairly equally as much lower. Um, and the bulls tend to exhaust after a long run up in a pattern like this, and the bears tend to win, and there tends to be quite a sell off that happens afterwards. Also, notice who's winning in the net volume race. The red spikes are what we're seeing the biggest of that are they're spiking up the net selling spikes, and then also the RSI and MACD give a hint as well as to what's going on also. See the sloping over of the RSI showing the slowing down of the upward momentum. So when you're in an uptrend, you look for divergences on the top heading lower. When you're in a downtrend, you would look for the bottoms heading higher. So we're in an uptrend overall, so you look for the tops heading lower. That's how you look for divergences. You look for a signal that's away from or counter to the trend. And then look how hard this one is right here on the MACD. Very, very hard sell signal and right here, and divergence where this high is much lower than this high. And notice it's starting to head below the zero line on one part of it as well. So quite a negative there. And then on the daily chart, we can get an even more bearish look. Look at the gap. This closed at roughly 52 up here on the daily chart, and then it gapped down to something like 47 or so, spiked up just a bit, and then kept heading lower. So quite a gap there. Very, very, very bearish because when the market opened the next day, the buy orders were so much lower and there was so much selling demand that it causes these huge gaps. And it's not necessarily uncommon for Oracle or some other tech stock to have gaps, but notice that the gaps have been lower for the most part. Here's another gap right here, which was a gap down. Here's another violent one right here, gap down, and then a very long down day or two or three after that. And the last gap up, which was kind of an exhaustion gap, was really before the pattern even started. And so once the pattern started, let me see if I can draw my lines here. Then you started having more of a, and these aren't they don't line up exactly. You could do it roughly like this or what have you. And then the bottoms are a lot better defined right there. And even here more recently, you see the RSI slumping, heading lower. So as this headed higher and this headed lower, that's divergence. You can see these sell spikes that I've been talking about all the more, and a very deep MACD sell signal. Notice where the bottoms were in these MACD sell signals. Notice how much deeper this one has gone. So just another bearish observation there. So a lot of these tech stocks that have led the way up are now starting to show signs of fatigue and heading lower. Another one that was a leader was Facebook, and Facebook has recently broken its most aggressive uptrend line, which is right here. So that steep angled uptrend has been decisively broken. It's broken decisively below its 50-week moving average. And sure, it could have a bounce up in the near term, and it could bounce from 150s to 180s or so, or something like that. But it still likely holds below this high of 195. Still likely holds below this most aggressive trend line, and any bounce up is likely muted, rolls over, and then heads back towards this 200-week moving average. Eventually, it likely takes that out as well. Notice the RSI, how distinctly lower it is on Facebook. Notice the huge selling volume spike, which is one of the biggest in its recorded history. I mean, there was one or two that was on par with it early on in its existence, and part of that is because when a company IPOs, about 6 months or so later, 6 months to a year later, the insiders that bought it at the IPO or pre-IPO price can they're allowed to sell those shares, and sometimes they will take some profits off the table. And so that's why some of the earliest ones happening when something starts trading publicly. But this is huge. This net selling spike to almost what is that, 470, 480 million shares net sold in a week. This this MACD slumping over. Look how steep this is heading lower. So between when you're looking at a lot of these leaders that led on the way up, Facebook and Oracle and some different ones, a lot of tech stocks, you're seeing a lot of breakdowns and weakness in a number of former leaders. Amazon has been breaking down here recently. If you were to look at its most aggressive uptrend line, you see it break it there very decisively and then head lower. The selling volume's been kicking up big time. The MACD's been slumping over. RSI's been slumping over. So lots of what's been former leaders are showing some signs of weakness. Netflix had a big reversal here at its top, and then its next high had a very violent reversal downward, very large, long red line. And then notice you've got your divergences. Pull it up here. You've got a little bit of divergence here, and then you've got quite a bit of divergence here. So you're seeing a slumping there. Its most aggressive uptrend line has broken, and this is what I would see for Facebook, that as it went down, it would come back no more than to the uptrend line that it's broken and head lower. So that's what I'm looking for Facebook. And then Google, of course, has been weak as well. Several signs of weakness that show up on it are you've got divergence on the RSI, you've got divergence on the MACD on the daily chart, you've got big selling spikes right here and right here, so lots of selling going on. The high, whether you draw the more collective high right there, or if you go with the tippy top high, up here, either way, the next high is a lower high than here, and we've also technically put in a lower low here at 984 than we have here at 997. So we've got a lower high and lower low here on Google, and then it's also broken its most aggressive uptrend line here, where it comes back up, kind of just slightly overshoots it, and then heads lower, and then now is having some days where it closes below its 200-day moving average. So that covers the FANG stocks: Facebook, Amazon, Netflix, and Google. Some will also include, they later on added FAANG, which is Apple. And Apple, while it's stronger than some of these, it's showing some of the same signs in that. Here's your main trend line there, and it's broken below that. It's broken below its 50-day moving average, which is slumping lower now. You are seeing some divergence in here. There's divergence in the sense of, this is kind of a longer one. This was going higher and this is going lower, and we're seeing the MACD in the below the zero line, and your selling volume starting to be some of your bigger spikes up. So lots of warning signs there from market leaders, and the stuff that led on the way up. One of the ways that you can look for market tops is to look for things that show that they're starting to break down, turn around, and lead on the way down. And so looking at Oracle's broadening pattern, looking at the FANG stocks, and just the broader NASDAQ composite has broken a more aggressive uptrend line as well. So when these lines get steeper towards the end of a wave 5 and they break that, this one was more of like a false break. This one probably is more of a real permanent break, because you're starting to also get with that divergences where that went higher, this went lower. Your MACD also shows this divergence here as well. And you're starting to see a little bit more selling volume starting to pick up here. So lots of negatives. Again, this does not mean, any of these tech stocks could bounce some in the near term, because they have fallen so far almost day after day after day after day. So don't be fooled by some decent percentage up days that could happen coming off of this. Not to say that they will happen. Maybe they happen, maybe they don't happen, but they could happen. And many times they'll just be bouncing up to a declining 50-day moving average, or bouncing up to a broken uptrend line or something of that sort, and still putting in lower highs than what they've ultimately put in. So especially with a lot of these big strong divergences, and FANG being weak across the board, and also when you see these those broadening patterns like we're seeing with Oracle, which is a big mature tech stock as well. So lots of bearish signs out there. So beware. Don't believe the hype. Don't believe it's buy the dip time. It's not that there can't be a temporary bounce, because there possibly will be. Markets don't go, even in downtrends, markets don't go straight down. They bounce on the way up, and then they head lower, and then they bounce up some, and they head lower. So any of these moves could have bounces upward and some up days in their future, but they will likely roll over and likely have lower highs than what we've seen recently, and see this head much lower, especially with such strong divergences across the board in some of the market leaders. So anyway, I hope these the analysis of some of these leaders and their chart patterns and divergences and trendline breaks help you to interpret and read the charts a little better. So thanks so much for watching, and God bless. Bye-bye.